Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, November 11th, 2024. It's 11:47 a.m. Eastern Time as I'm starting the video. I just want to start out by wishing all the veterans who've served this country wanted to share my gratitude, my most sincere gratitude. Thank you for your service. And on that note, Veterans Day, the stock market is open today. Bond markets are closed, so we're not going to talk on treasuries. Here's what we're going to do in this video. I wanted to start out. Let's do it this way. I want to just knock off a few trade updates. I had two questions today that I saw and answered. Update on XLF and an update on Tesla, so I'll go over both of those. GDX, silver and gold, PayPal, and then UNG. I got UNG out to you today. I almost marked up a chart. PayPal's getting very close to second target, so I'll cover that. And then at the end of the video, we'll go over the NASDAQ 100 and the top components there, time permitting. Depending on how long it takes me to knock through these, I want to cover the semiconductor sector and some of pretty much all the components of SOXX. There's only 30 in there, but again, when I get to the back of the video, towards the end of the video, if I can't get that in, I'll just break it down and do that in a separate video, so it's not a mega, 40, 50, 60-minute video. Okay, XLF. So somebody asked me thoughts on XLF. Obviously this was the Trump pump. For those of you not familiar, Trump is widely regarded as anti-regulation or, lesser regulation. So the banks immediately popped hard on the Trump win. Obviously, it wasn't fully priced in, nor it couldn't really be because the race was so close. So I don't think anything could have been fully priced in as far as what the impact a Trump or a Harris win would have. So you can see now that that's what happened. So we had the Trump pump, call it, and for the most part, the financials have gone sideways. So my reply was to that. Request for an update was simply that there are zero sell signals. In fact, we had a whipsaw. We had a nice clean uptrend line. Pre-election broke down. Sell signal was waiting to see a break of that 45.82. That never came. And then again, the election is a mega event, in the stock market. Certainly is something that fundamentals can trump technicals. So either way, that it's just like taking a stock in front of earnings. It's a crapshoot. Any breakout or breakdown has a much higher rate of failing, and so that was the election pump right there. And so my reply is, watch this. We have on most of the big banks and other financial companies, non-bank financials, we have the potential for an island cluster top. Now, so my reply was there's absolutely zero sell signals. You got the financials at multi-year all-time highs with nothing remotely close to a sell signal. However, the technical posture hasn't changed. We had divergence recently. This was a divergent high, and so is this. The divergence has not been taken out yet. It's only grown larger, still very much intact. But again, divergence is not a sell signal. So what might be a sell signal? Well, here's my reply. They're too hot to chase now. They're just too... No reason to chase the financials, the technical posture. The risk-reward profile doesn't look good at all, in my opinion. If you own them, just trail a stop up. Don't fall in love with them. But what I'd be on watch for is one potential, many kinds, but one potential sell signal would be a gap down in the coming days here that could leave this what we call an island cluster top. I recommend you look that up if you're not familiar with it. It's when, and you look for those, you only want to look for them at the end of a prolonged uptrend. That's exactly what we have here. You can see off the October lows, this is an uptrend, and a island cluster top is as the name implies, a topping pattern, and it's defined by a gap up, separated by an island, or with an island of candles. That's what you get here. Then separated by a gap down on the other side. And the strategy is super simple. The risk reward is phenomenal. And like any trade, it either works out or it doesn't. So if you get a gap down, you set a stop above the top of the island. No more than that. You could have a tighter stop somewhere on the island in it. And then again, if you do get that, you treat it as such, a reversal pattern. What does that mean? A trend reversal. So it undoes, it says this trend is now over. And again, no guarantees, but again, the takeaway here is if you gap down, let's say tomorrow, and you put a stop, you have let's say a 4% stop in that case if you gap below the island, right? And your profit potential If the financials reverse, well, I think we'll see them in the next year or so come and test this uptrend line right here. And that would give you, so you're risking 4%. Let's say the gap down happened right there to make possibly 30%. That is a phenomenal RR. So again, you might not have the highest probability of success because it's a counter trend trade, but that's it's countered out by a phenomenal risk reward ratio. You're only risking, again, 4 or 5% to make 30 or more, and so that's that. So again, it's just a setup, something that hasn't yet happened. And there are other types of sell signals you can get, but right now I don't have a clean uptrend line or anything. So let's just watch for that. And then somebody asked about Tesla. I'm going to get to that when I get to QQQ because I want to go over all the top components. It exceeded the stop. I threw it out there again as a trade. Boom, popped through resistance today. Today is a low volume day. Again, the stock market's open, but the bond market's closed. It is a holiday, national holiday, so you're going to get whipsaws. It's like the day before Thanksgiving or Christmas Eve. Take those days, any breakouts that occur, with a grain of salt. Now, with that being said, a stop is a stop. I'll just say, that's it. If you want to give Tesla some room, again, I'm going to get to that towards the end of the video when I get to the other ones. GDX, let's do that one. Okay, this is the last static chart I posted. By that I mean I constantly update a lot of these things in videos, but the last update I gave you was right here. When was that? The 6th, last week. And warning of this, I told you about this EKG pattern here we've been trading, GDX has been a great trading vehicle, long, short with the trend line breaks, but I warned of these divergences getting bigger and bigger and bigger and not being negated at all, still very much intact, a lot like what I just showed you on XLF and a lot of other things. And, that just warns of a likely trend reversal, and that's what you got. So in one fell swoop, we broke down, we took out that 38.988 support, hit my first target, 38.19. I figured a bounce was likely. It was good support. And said that any bounce back to near, and I've made very clear in the video, I wouldn't wait for 39.88. Probably want to short a little bit before that, would provide an objective add-on or re-entry for those that booked the profits. That was a 5% down day, gap down to that level. And that was then. This is now. I had us going down here to 36 next after that bounce. And let's pull the live chart. GDX. Can't call it much better than that. There's the bounce off 38 right to a high of 39.79, just shy of that level. And if you took advantage of it and shorted there, then you've made now another 8%. And again, this was a breakdown that has longer term bearish implications because we're coming off that bigger divergent high. Coming up on the next support again, 36 right there. Let's look at the metals too, because that's going to determine where you go. Gold right now is at support. So what do you do now? Do you short GDX? No. Or silver? No. Gold is at support, so what you need to see, and you'll probably buy it here. It's a well-defined trend line. It's the same chart I've been sharing with you. We had, sell signal 1 there on the minor trend line break, secondary sell signal, and now and then a back test too. Boom. And then now we need to break this level if and when that happens, which again, I suspect based on the large divergence there, that then is going to take gold lower and GDX and silver will follow. So SIL is the silver ETF, and that too, you had a divergent high breakdown there, sell signal dual support, 29.52. Again, all this covered recently, and that's pretty powerful stuff. So silver is also coming up. I could put a line right here. Look, you have a reaction high there, a reaction low here. So we're coming up just like gold. Gold's at support. Silver and GDX are just a hair above. So the best thing to do, in my opinion, maybe just lower stops on them to kind of, try to milk out. If you want to milk out that last little bit, tighten up stops so you don't miss, or if gold happens to rally hard off that trend line, you don't get back a lot of the profits. But so far, so good. And again, the charts indicate the potential for even more, especially when gold breaks a trend line I just showed you that we're currently testing, and then silver has this uptrend line, and then, of course, GDX, it's just going to follow the metals. So that's that. Alrighty, what's next? PayPal. Told you PayPal is coming up on the second price target. We're up about 30%, I think, on this one. We took it here. We hit T1 here. Let me pull up the PayPal charts for you. The previous ones I gave you, PYPL. This was the original trade right here, entry. I covered it first in a video. I told you it would be a buy signal and a break of 70.69, and right when it was cracked it, I got it out to you. Said we just triggered a long entry. T1 get a reaction, T2 get a reaction, T3 is my final target. That's why you have that lighter shaded. That's only potential T4, and I will not be extending T4. I just want to let you know it's still only potential target. Next update I gave you was when T1 was hit. Said you can consider book partial full profits and or raise your stops if holding out for T2 or T3. We hit T1. That was on September 19th. And now here we are. So we hit T1. Let's just fast forward. We hit T1 right there. We went a little higher, put in a small divergent high, had a correction back. So if you miss this trade, if you miss this breakout there, you had multiple opportunities after we hit T1, took it out, and then we back test it. Remember, support, resistance once broken becomes support. That's TA 101, guys. And so again, if you recycled back in or wanted to add to it, you had multiple re-entries there, because once that first target, which was resistance, was taken out, that resistance became support. And now this trade is up. I think it's getting closer. It's a 23%. I'm sorry, but again, want to just point out getting close to T2. Also have some potential divergence still forming. That last divergence gave us a little pullback. So there's your update on PayPal. At the very least, raise stops. Trade like this up 23% should at minimum assure a profit, not even a break. In other words, you raise your stops to, when T1's hit, you should at least pull it back. At that point, you raise your stops to entry or higher. And then as you start to walk away from it like now, again, you can already see it. Look, where to? If you want to know a tactical place for a stop, well, right there below, that's support right there. So somewhere in there would be the biggest stop I would allow it at this point. You could, of course, have a tighter stop under these reaction lows. That's up to you. All right, next up is UNG. I'm going to get that out to you today. Remember, futures, you had plenty of opportunity. You see a big gap on UNG. In last week's video, I think it was Friday, I said a break above 1311 should do the trick and get us a nice, pop and run. And, when we were here last week, this was our last entry. I highlighted right here as a long entry there, and or on a breakout of the trend line. You got the trend line break came right after. And so from that last entry, we're up, to today's highs about 11%. And that's mostly today, too. Well, it was up a little more before. And so that's it. And then, again, you had resistance just above on natural gas. And I always say, but it bears repeating that the price targets I give you are the actual resistance levels. And you always want to, if that's your number or this one, you want to sell a little shy of that, because traders will often see that level. I do it myself and sell a little early. Now, I very much like this. Look, we've taken out, we broke, it's 101 reasons, but it just keeps falling back to this support level. And at minimum, it's just good for a quick trade. We've been doing this for a while now. But I still have these longer term targets that I think we have the potential to go up to. So that's it. You have your update. It's effectively a hit, because again, you want to sell a little shy of the actual resistance level. Same thing with natural gas futures. You can see here on NG, and this is the point I'm trying. There was a gap up, and we gapped above this trend line, but then it was running up, and then somewhere here, natural gas UNG opens up. So futures traders get that kind of heads up move. We may get a trend line forming here, and let me see if that's a case right there. Nah, not enough reactions. Just leave it like that. So that's it, guys. We, pullbacks to support, in an uptrend, you buy pullbacks to support. That's not super well defined. It is support somewhat. There's support there. There's a trend line there. But natural gas, when it starts to pop like this, it tends to run. It tends to trap in shorts and not let longs back in. So My preference just to sit tight now, right at any pullbacks. If you have dry powder, you can certainly add on pullbacks to support. And then stops are going to be wherever you took it. Everyone has different, entry points. I update these trades quite often. Natural gas is volatile. There's plenty of objective long entries and exits. Okay, on to the stock market, and then I think we do have enough time to quickly run through the semis real quick, as I consider that a very closely related, and I talk about the stock market, my preferred trading proxy, NASDAQ 100. Here's that market top range from back laid out back on June 26th. It has not been altered. It remains here, about 485 up to about 512. And as per my comments last week, we're still there. We closed the week on it, parked right on it as expected, and still have very, very much the same technical posture than back here when it was first laid out before we even got there. Remember, we went up about halfway into it, had the first correction, hit T2. Time to reverse and cover there. We went up. We're back now to the top of the range, and that's where we closed last week. And so let's see how this week will happen. We're at 513 again on a 500-point security. I can't even measure here. We're talking basis points. So effectively, I always say if you have to squint, it's not a breakout. And you can see we're right there. We're still right at that top of the range. So let's see how we finish this week. It has the potential. If we start moving up here and break out, and that cannot be ruled out, certainly could see a blow-off type top. We start getting away from there, then the targets, the fibs don't line up. We start to then burn through divergences, which are still very much intact right now. So there's no change there. Still waiting to see. Last week, again, we had a presidential election and a Fed meeting. So you can't really have much more than that on the economic calendar, so to speak, even though it's not the economic calendar, but a big presidential election. So, all right, that's that. Now let's talk about the semis. So the semis are, let's just look at the chart first and just look at it for what it is. These are still my long-term targets, which I think I gave you the same. These are back on August. I give you these back in August. And you had this is SOXX, which is the go-to. This is the iShares PHLX SOXX Semiconductor Sector Index Fund. For those of you not familiar, the PHLX SOXX Semiconductor Index was the first and still is the main semiconductor sector index. It goes back into the 90s. And so this ETF tracks that one. And so a good one to watch. Liquid, very liquid ETF. And you can see here this is a weekly chart. You had this beautiful bearish rising wedge. Here's a case where you had divergence that kept building. You had a little sell signal 1, divergent high 1. Did play out for a nice drop, double-digit drop. Remember, the semis are volatile, so these doesn't look like much, but that's a 17% drop. Pushed up, made a marginal new, and still divergent high right there. Actually, something happened. Carried over here. That might have been carried through on a daily chart. Let's scratch that. I'm looking at it. Let's see. Where did I have the divergence? I don't know where this line came from. Must have had it on a daily or something. I'm going to delete that. I just want to let you know I'm cleaning this up. This is our divergence right here. So it shouldn't really be DH2. Must have been an error there. So there it is. Either way, that was the wedge. Highlighted back at the time. That's when the NASDAQ peaked. On July 10th, semis peaked, no coincidence. We had that big drop. You get more juice. Typically, when you're shorting the market, you get more juice shorting QQQ or going long QQQ in a bull trend than you do SPY. And you get even more juice using the semis. That drop, you can see, was 28%. And that drop took us down to this B now. So it wasn't back then, but now it's a beautiful trend line because we had that one. Well, we had the initial reaction right there in October 2022. 2 more, 3, we've been bouncing on it. This is the level it needs to go, and you have this downtrend line here as well. It forms a symmetrical triangle pattern. So that was it. T2 was a trend line that's already been hit. Oh, that was actually here. I give it to you more recently here on this break. And these are still the longer term targets. All right, so let me put that uptrend line here. I have this on the daily. I'm going to toggle over to the daily right now. I just wanted to make sure my weekly's updated. Okay, so now let's talk SOXX. there's that same divergent low, 2022 October. There's the October, early November 2023 low. Look at this thing just dancing on this line, and it can go either way. Again, I'm going to get nitty gritty right now down into the charts. If we break that trend line, that would be a very powerful sell signal. You also have price support right here at about 219. So that's what to watch. Now, from the bull case, we have a downtrend line. Pop that, and then you have resistance just above it at 242. So there are your levels, guys. Set price alerts, react. Right now you're in what we call symmetrical triangle pattern. Those are typically indecision patterns. They can break either way. Respect which way it breaks. And if it breaks one way and then goes the other way, yeah, this market's been plagued with whipsaws. Then you just have to, again, react. In other words, if you short a break of the uptrend line in 219, and then you see a big move through there, especially on a solid daily or even better weekly close, then we go up through the top. Yeah, you're going to want to cover any shorts that you have, and you may want to join the long train at that point. We'll see. All right, all I can tell you, those are the levels to watch. Now let's get a little nitty gritty. Here's what I wanted to point out to you. So, as you know, I have when I queue up an ETF, sector ETF, it's going to show all the components. So right here you have 30 stocks. If I click on the last one, you can probably just barely make out at the bottom of the screen here. It says 30 of 30 components in the watch list. So the biggest being NVIDIA. I sort my components by market cap. This is interesting tidbit. We're going to go through all 30 right now, but I'm going to tell you that of the 30 stocks in the SOXX, in this ETF, which tracks the SOXX Semiconductor Index, five out of the 30 are at or near, and when I say near, within 10% of multi-year or all-time highs. That means 25 out of 30, almost all of the semiconductor stocks, are way off their highs. They're in bear markets, or if not bear markets, they're over 10% off their highs, which in many cases they put in months ago. Okay, so where's that relevant? Well, it's relevant in the same way. When you look at the stock market, when you see breadth deteriorating and fewer stocks, think the Mag 7 are doing the heavy lifting. That is typically it's bearish, number one. Now, one of two things can happen. This lower tier, that 25 out of the 30, can start playing a game of catch up. But what it is, this is the same story. NVIDIA and TSM, as you guys all probably mostly know, are TSM, Taiwan Semi makes most, especially the hard to make chips. So you're going to have Taiwan Semi. In fact, we'll go through the individual components now. And now here's the takeaway too. The five that are up, by the way, the five that are at or near within 10% of their highs are NVIDIA, Taiwan Semi, Broadcom, Texas Instrument, and Marvell. Okay, I'm going to go through all the charts here. Of those five, you're going to see some common similarities, which are, as you can see here, divergent. We're basically back where we were, just a hair above. That's a breakout above that high, but it's no volume. Number one, if Trading 101 says you want to see a breakout on above average volume, typically 1.5 times or better the average volume. Every broker is going to give you a different one. Some give you a 60-day, some give you 90, some might even give you 120-day, but roughly the 60, 90-day average volume. And as I talked about, volume has been non-existent recently, and that's a red flag for the market. It's a red flag for breakouts. Why? Because breakouts that occur on average or below average volume, especially below average volume, have a much higher rate of failing. And you can see my volume bars down below. So, and breakouts, and you've heard me say this for years, if not decades, if you follow me, breakouts that occur to new highs with negative divergence and overbought conditions have a much higher rate of failing than those that don't. So what you have here is a big fat wedge, a ever so slightly, almost an equal but a slightly marginal new high, and we're precariously close to the primary. This is just such a beautiful uptrend line. Comes off the October 2022 lows, and you have lots of reactions on it. Let me try to draw here. There we go. Something's going on. Let's see here. Why is that draw tool not working? There it is. Okay, this trend line here, it's weird. Usually when I activate the drawings, it deactivates what I'm dealing with on the charting platform. So that's what's happening right now. I have the drawing tools activated, and I can't draw on that trend line because it's some reason it's never done this. There it is. The chart was activating and it was moving everything. Okay, so that's the trend line. Obviously, you can see it's very, very clear. And again, relatively close. Relative is relative to the scope of a move of anything. Treasury bonds, a relatively big move is, in a day is 1%. A relatively big move in NVIDIA in a day is 10%. All right, so we're just technically a few bad days away, quote unquote. I'm taking out that trend line. However, as I like to say and often say, support is support until and unless broken. All right, so there are no sell signals. Looks to me like one big fat giant wedge. I've given you targets. The day I gave you those long-term targets on QQQ back on June 26, I also gave you long-term targets for NVIDIA, which since NVIDIA split, all my targets went way up here. I have to replicate those. Thought I had them for you. Oh no, maybe I do. Let me go back here, guys. Oh, I didn't realize I had cut the screen off too when I was trying to drag that trend line. Oh, that's why it wasn't working. I was having a hard time. Okay, you probably didn't know what I was talking about in the video. I didn't realize I had shifted my screen like this. Okay, so that's what was going on. Okay, back to NVIDIA. Yes, I do have my long-term targets. They're right here. So that's it. There's the primary trend line. There's the long-term targets. We're in a market that seems like it'll never go down. We all know at some point it will. The when is when this trend line breaks. NVIDIA, and the reason I'm doing this coverage of all the components of the semiconductor sector and the stock market, it is without a doubt, it's the king of AI hype, king of the AI bubble, and it will have its day, and its day is going to be ugly when that trend line breaks and we get that sell signal, especially on a weekly closing basis. But let's rifle through these semis themselves. So there's NVIDIA, one of the few stocks at or near coming off an all-time high, multi-year high. Taiwan Semi, of course, because they're the beneficiary, especially of NVIDIA. And so they're going to move pretty much in lockstep. However, let's just talk pure technicals. Taiwan Semi broke down, back tested, and just got rejected today, down 4%. 4% again isn't a big move, relatively speaking, for Taiwan Semi. If Treasuries are down 4%, the world's coming to an end. Taiwan Semi goes up and down 4% a day. It's not a big deal. But what is a big deal? I always say any big move is insignificant unless it does something technically. So right now we have a breakdown, a backtest, and I often say the problem with shorting backtests is that you can continue to backtest for quite some time. That trend line goes up and up and up, or eventually you can regain it. So what I like to see is the rejection following a backtest, whether it's the initial backtest or subsequent backtest, and you get a big red candle. So far, pretty good today, but look where it took us, right back to that previous high. This was the previous all-time high, divergent high too, big correction after it. That's where we covered everything. The 200-day moving averages, all my price targets and everything were hit. That was August 5th. And so we got the expected bounce off that level, carried a little higher. But I had all along even on the NASDAQ and S&P, the potential that we put in a marginal new and still divergent high. That's what they did. Marginal new high, came back in. We back tested that breakout. We've been back testing. So this is what I'm watching. And I'm spending a lot of time here because TSM is the second largest. All right. Right behind NVIDIA. Back test, rejection. So that gives us a little check mark. The breakdown, and then is a check mark for the bears. The back test and rejection's a check mark. But we got to take out this level by a clear margin, right? And then that'll be the next check mark. And then a break below this first target, 175.90. Then a break below the 200 days. That'll be even bigger. That'll say the trend is likely changed, etc., so forth and so on. Okay, so there's your analysis. Again, this is one of the only 5 stocks that are still near its highs, but it's in a bearish technical posture with some recent sell signals pending. You want to play it safe now. You got to take out, since you've been back testing that breakout to highs, you have a couple lows just below it. So set a price alert if you want to set it and forget it, or about 187. 187 goes, that should be tell us that this one's rolling over, and that'll be the next sell signal. Okay, let's go a little quicker through the rest of them so I can wrap the video up. Broadcom, not marked as such, but you can see the divergence drawn. That was a divergent high, and there was a big double-digit drop measuring about 32%. Boom. Yep, that's the August 5th lows. Cover everything, Broadcom included. Trend line hit, 200-day moving averages hit. Another trend line hit, another 200-day moving averages. You can see the red and blue lines. This is such a beautiful chart. I mean, beautiful, because you have the 200-day simple and exponential moving averages and a primary trend line that's so well defined a blind man can see it, right? So it just doesn't get any better than that. Now, we're comfortably above it. The stock's in an uptrend. Make no mistake about it. Zero sell signals, but that was big. That was a big divergent high, and we had a big drop there. This is an even bigger. It's the same divergence, has only gotten larger. That indicates a much larger drop to come. So bottom line is, I'm pretty sure I already have it. Set an alert on that trend line. And that alert could go off next week. It can go off 6 months from now. When it goes off, you want to check the other semis. Are they breaking down too? And if so, you want to get in quick. I know this sector, when it turns, when you start to get multiple sell signals, the rush for the exit is pretty powerful. So there it is. So this is, again, also another one at or near all-time multi-year highs. So you can't knock it. There's no sell signals. But I just told you when the sell signals will come, especially a powerful, high probability sell signal is what I like to call that. ASML, again, like most, well off its highs, to the tune of 40%. Hey, I'm also doing this video for you that those of you that are bullish on the semis in the market. And look, I'm looking at this, and I'm you know me, I've been taking some semis long. There's a lot in here that are down, like ASML, that are down 41%. So let's just say the sector continues to climb. You could see what we saw in the stock market recently, some sector rotation where all of a sudden NVIDIA and Taiwan Semi are just getting bloated and top heavy, and some money rotates into these lower tier stocks. Now, again, that's this thing is long since peaked. It's down, well into the double digits, over 40%, but it has positive divergence. Unlike, it's these negative divergent highs, you want to look to get short. Then you short on sell signals, break of support. You had multiple sell signals there. Then you get the positive divergence. Now, I don't have a clean downtrend line or really any price support. This is a busy, choppy chart. And keep in mind, the stock just peaked. Sometimes you get these divergent lows. If you go much lower from here, it's just barely clinging on to that divergence. What I mean by that, if it continues to fall much further, it's going to have taken out the divergence, and that's pretty bearish, and the stock's going a lot lower. And the video would go too long if I got into the weekly charts, but I do think it's going down there. This is my weekly of ASML. I've covered all these semis in recent months, and I've hit on in some of the videos that I've dedicated exclusively to the semis. I've covered all these weekly charts. So if you are interested, you're new to the site, just go below this post, click on the symbols on the bottom, like ASML. You'll see a symbol tag after I do this video. That'll queue up the previous videos in which I covered this one, and you'll see things like this. That is a beautiful long-term uptrend line right there, and it's a magnet. When you get that close, you're probably going to hit it. That's from my experience, and so you still have a little downside left. And these were targets I gave you back here before the last bear market. On these, I did these videos. I created that back on February 3rd of 2022. Gave you these targets here. Also that one, February 3rd, as a trend line. And so where was February 3rd, 2022? Right about here, where the crosshairs are. So when you broken down, I had pointed out, we broke down, we had a back test. This was on a sell signal. And from that point in the video, you still had another 52% to make on that stock. We hit my second and final target to the button. And then boom, and that's what happens. So we come full circle, divergent high, beautiful uptrend line break, and that's, again, the level we're going to, but the difference now is sooner or later, and I think it's going to be sooner than later, this trend line, like all trend lines, breaks. No uptrend lasts forever. And so based on the scope of these divergences, we had a relatively small divergent high back then. And this new high that the stock made after reversing off my final target there was a marginal new but still divergent, much larger divergent high. And that bigger divergence on this weekly, and all the semis have this, just about all of them have the same thing, indicates a much larger drop. So we got 60% drop last time around, and next time around I think it'll be a lot bigger, especially if and when that primary bull market uptrend line goes. That trend line goes all the way back to 2000 and late 2000, the end of November 2008. If you're going to replicate it, you need to do log scaling, or else you're going to get a whole different chart that's not going to look the same, and your trend line's not going to fit. So make sure on long-term charts you use log scaling. All charts I like to use log scaling. Okay, let's continue to pick up the pace. AMD, wedge, symmetrical triangle pattern, beautiful uptrend line in which triggers sell signal. Likewise, break above the downtrend line would be bullish unless it fails. And you can see the overhead resistance level. So that's AMD is a big one. Again, well off the highs. Peaked back here like so many back earlier this year. This one actually peaked in March with a divergent high, a bearish engulfing candle, and an island cluster top like I talked about earlier, we're on watch for on the financials. So there's a good example of an island cluster top. You have a cluster of 3 candles separated by gaps on both sides. Pointed out back at the time, and so far from the peak on that stock, it fell about 45%. I would say that's a pretty good trend reversal. The $1,000,000 question, is it over? There's no evidence, technically speaking, that it's over. The stock is in a downtrend since then. It's making lower highs and lower lows, but we're in that some triangle pattern. So if it breaks to the upside and it starts taking out these previous highs, that's going to be net bullish. Likewise, if it breaks down from the triangle pattern, it starts taking out these previous lows, it will keep that longer-term uptrend intact and tell us that the majority of semis, like this one, are in fact in bear markets. And you wouldn't know it, by just watching SOXX, because it's so top-heavy in the big 3, NVIDIA, Taiwan Semi, and Broadcom, that it kind of skews it masks the real performance of the semiconductor sector. So it's all about AI. So it's all NVIDIA, and then Taiwan Semi and some others riding their coattails, or anybody that's attached AI to their brand right now. AMD. All right, next up, Texas Instruments. Okay, this is one of the 5 at or near highs, but again, series of divergent highs. Divergent high 1, 2, 3. Simple stuff, right? Divergences aren't a sell signal, but you've had that off that first divergent high. Just to quantify it for you, we dropped 15%. Again, look at the boom, 200-day moving average. Hit it, boom, popped. And there's a trend line there too. I don't know if you can see it. I have a minor trend line drawn right here. And then this is the secondary trend line right there. Another divergent high, another drop. You zigzag down, hit that trend line again. And the latest divergent high. So expect that trend line will ultimately go, and then when it does, more downside. Qualcomm, divergent high, island top. An island top is a single candle separated by gaps on both sides, highlighted at the time. If you didn't like the island top I pointed out, well, you also had a bearish rising wedge I pointed out, nice and clean wedge. And you shorted that, and you made 30%, and then as posted on August 5th, the morning of, when everything was bottoming, the futures plunging, cover all shorts, all accounts, go hard long, so you would have went long. If you were trading this one and made 20% up to that recent high. But look at it. So what I have here is the zero line delineates bull and bear trends, right? When you're below, the PPO is above the zero line, you want to be long and strong. When the PPO is below the zero line, and the zero line will act as resistance once you cross below and you're in a bear trend, or when you're above and you're in an uptrend, you want to buy pullbacks to that. It often contains pullbacks. So right now, all I can tell you definitively is we crossed here. We've been in a downtrend since. We are backtesting. We've been backtesting. If we get rejected, you're going to see the next leg down. Now, if it breaks above, then that's one bearish sign that the trend may have flipped and we may be going higher. I don't have a strong opinion, but when presented with a stock, again, it put a gun to my head if I had to go long or short, because the trend indicator is still bearish, The PPO, I'd have to go short with a stop if we start crossing above, right? You got to go with the current trend if the chart's not very clear. This is basically just consolidating. You can say what you want about it. Bulls win if it goes this way. Bears win if it goes that way. AMAT, chip equipment maker, again, well off the highs. Peaked back here in July when the NASDAQ peaked. Previously put in a little divergent low there. It's kind of been moving sideways-ish since then, but still. Oh, and also, breakdown of the primary trend line, back test, rejection, still below it. Oh, below the 200-day moving averages. Currently testing the 200 simple. You have the 200, exponential, and the 200 simple is a little bit above it. Micron, still well off its highs. But above the uptrend line right now. This is the primary uptrend line. Testing the 200 days, turn off all the lines. You can see it's been trying to regain these 200 days. When you're below the 200, you lost them here. Rejected. Tried to get them again, rejected. Finally took out the 200s, both the simple and exponential. Bought every pullback to the 200s, got bought. Lost them here. Tried to regain him, rejected, trying to regain him again. So being the fact that we clearly lost him here, I'm treating, even though we're on him, that's a rejection, a test. So if we can break above the recent highs, you'll get back above the 200s. That's going to be bullish. Otherwise, if you see it start to move lower, that's another rejection. It's going to keep that bear trend intact. And that's Micron. And then you want to see a break of this trend line, and that'll be lights out for the stock, in my opinion. If you're bullish, you can buy a pullback to that trend line, but just keep in mind that you're buying it below the 200-day moving averages, and that usually doesn't work so well. ADI, analog devices, put in a divergent high, peaked here. There's your primary uptrend line right here, and the 200-day moving averages. So you have double support right now. You've got the 200s, say buy the 200s. When you break below, that's a bear trend. You broke below and it dropped 15%. Here they took it back, buy the 200s, sell them when you break them. So that's it. So all I can tell you is this one's sitting on dual support, uptrend line plus the 200-day moving averages, and it's coming off that divergent high. And a break of that level would take us down here. The next target I have is about $201, then about 180. Intel, covered this one quite a bit. It was one of the ones when recently, several long entries, several long trades. Currently out of it right now. LRCX, Lam Research, another one, peaked here with a divergent high. Beautiful uptrend line, bearish rising wedge break. Sell signal gave you plenty opportunity to get in. It just dropped from there. If you took the short, it went down 27% into the August 5th lows, where you would have covered all longs or all shorts, including this one. Game to bounce. Where did that bounce go? You got it right to the 200s. Took that above the 200s, above the 200s, above the 200 pullbacks. I'm highlighting pullbacks once we regain the 200s here. And then you lost the 200s here. You rallied back. That would have been a quick, easy trade. Cover on August 5th lows like we did. Bounce, sell the rally right into the 200s. You could have turned around and shorted it, doubled up on your profits. You could have, and it's just some stocks behave very well, some better than others on this. And you can just see how this stock is now in a downtrend line. They keep selling it, rallies into the 200-day moving average. That's a bear trend. If it takes them out, then hey, something else is going on. But right now, that's it. And watch the market leaders. If the leaders break down, which again it looks to me as likely in the coming weeks to months, then the rest of these stocks that are already sucking wind will resume their bull markets or bear markets, bear trends. KLAC put in a divergent high here. It's right on support now. It's lost the 200-day moving averages after buy the 200s, 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 lost. And now you're below them. So this is on a sell signal. If it can get back above the 200s, which is also around that 728 resistance level, well, that should be net bullish as long as it can hold above. If it breaks this, look, it's dancing on support right at about 655. You might want to set an alert on this one because that's a pretty nice support level. And this is one of the big chip equipment makers, which are kind of the canary in the coal mine for the chip sector as a whole. All right, so that's KLAC. There's Marvel, one of the 5 at or near coming off a recent high. And really failed right about so far where that previous all-time high or multi-year high was. You can see it just hit that $94. You can't call it bearish just because it has a one-day drop, but if it takes out this trend line, then it's going to have clearly failed this breakout or attempt to break out or test of that, and then you have a potential double top there. So watch that trend line. Next support is 78.50. If that goes, you got the 200 days down here, and you've got this trading range right there at the bottom of that, and then this uptrend line, which I think it'll come down to at minimum. So if you're looking for just kind of a swing or trend target, it's that uptrend line, which will probably come in with that 66-ish level at the time when it gets there, and that'd be about a 28% drop in that one. So, I mean, be aggressive. You could take a shot here with a stop somewhat above there, targeting that level. But again, if you see the leaders break down, guys, the ones that haven't already, like NVIDIA, Taiwan Semi, Broadcom, Texas Instrument, that's when these other second and third tier companies are just going to bottom out, just really crap out. Not bottom out, like find a bottom. I mean crap out is what I meant to say. Bottom will fall out. NXPI peaked back here in July, like so many things tech, still below. And it's got positive divergence, so take note of these. If you want to bottom fish or go long short the sector, short the most bullish looking ones. But again, don't be fooled. I'm pointing out the divergence, but remember, in a bear market, a bear trend, if that's what this is, if that was a major top, and we are going a lot lower, and we're going to go hit those deeper targets I have on SOXX, then you're going to get divergence. Just like you get positive or negative divergence in a bull trend, you're going to get the positive divergence, and it either plays out for a relatively small bounce or no bounce at all, gets taken out. Again, if you turn off all the lines, note that this, like so many semis, are now trading below their 200-day moving averages. Now, some of them briefly have a history of punching through there for a few weeks and then getting back up. Some behave better, behave, I mean clean reactions. Not this one, but some of the other ones I've showed you. And again, remember, take it all collectively. So if you have, for example, there's 30 stocks in this sector ETF. If 20 of them are below the 200-day moving averages, it's safe to say that that's a bearish posture for the sector. In the sector, again, you look at SOXX, it's deceptive. You look at SOXX, it's actually taken its toll. I guess it is. It's down a little more than I thought. It's down 15%. So yeah, the whole sector as a whole is down pretty comfortably above its highs. And again, it's just NVIDIA, a few others. And again, if you back out NVIDIA and the 5 that are up now, the SOXX would be way down here at this point in time. So they're holding it up, so to speak. Even though the sector peaked back here, when you lift up the hood and look at the engine, it looks a lot worse than this looks here. All right, where was I? I got to wrap this up a little. I was on KLC. I did Marvel. Yep, I just covered Marvel. NXPI, I just covered that, I believe. CHP just broke this trend line here. See, it's been riding this down trend line. Also put in a divergent high and a bearish engulfing candle there, and it's been down quite a bit. Big divergence. So, you can, if you are bullish, I'm showing you a lot of those that have positive divergence. And this one, in this case, coming up to support too. You can see a previous reaction low right there. MPWR at support right now, 589. Okay, brief interruption there. Where was I? MPWR, monolithic power systems, big fat divergent high. Really, it was about, yeah, you can call that, or that's technically the high, but again, close enough right there. Beautiful. Look at that pattern right there. You had a nice clean uptrend line, big wedge type pattern, divergent high, gap down below it, flagged a little bear flagging. Oh, and look at that. Look where they took it out too. Here's the 200-day. They bought the 200 days there, but that time that big gap down took us below. It back tested the 200s and that 781 price support right there for a few days, a couple weeks actually. couldn't do it, couldn't get through. Boom, 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 boom. Wanted the 200 so bad. Once it became clear to the masses that it couldn't hold them, another big gap down. And so this is what happens in this sector. Sometimes you can get a crowded rush for the exits. However, this one is at really nice support right now. So beat down, not a whole lot in the charts to make me want to buy it. Potential selling climax. Again, this is, if I had this one short, I'd be covering it right here today. Down 22%, right to that target I've had. I've had this target here for, created that back on February 14th. And if I updated, I might have tweaked it a little bit recently. But either way, it's just, these are things to watch. I know I'm being repetitive here, but watch, collectively, how many of these are trading above or below the 200-day moving averages? How many are trading above or below, support resistance levels? And this is, what's going on if the, with the semis right now, the market racing and, at least the broad market, which again was mostly the financials that lifted the S&P after the Trump win. Alrighty, we're almost done. ON, this one's been beat down. This one peaked back in middle of 2023, and it's down, right now, it's still down 37% where it was. There's a nice clean downtrend line. I'm going to pull this pattern, this line there. So it's in a little triangle pattern, but, best case scenario, you're looking at a bear market rally that if it pops at, you go up there, and then maybe there. However, if it, starts taking out these lows, you have to ask yourself, why is this stock down so much over that period of time? It's not a healthy sign. STM, nice big positive divergence, but here's an example. Well, that wasn't quite divergence. You almost had an equal low. I was drawn if you would have got that low, but what happened is before it could put in a divergent low, it just gapped down. It's got big divergence now, and it's also, it's not great support, minor support. Remember, divergence isn't a buy signal, but you don't want to short a stock that's already down off the high 53%. I'm just kind of showing you, what it looks like, and here's one that lost the 200s there, tried again, and boom, got rejected. TER, Teradyne, divergent low. Again, no buy signals, but positive divergence. Peaked here off that divergent high. And, I'm sure you can, here's an example. Watch, I'll draw it here. I'll add going back a little bit. So we had a divergent low there after it peaked right here with a bearish rising wedge pattern. Nice clean sell signal and a well-defined bearish rising wedge pattern. So you had divergence there, you had it there, you had it there. Finally, you did get a reversal, and then the divergence had to grow bigger and bigger and bigger. So just keep that in mind. I mean, you could rally off this divergent low, or my guess is probably it's going to probably continue to fall until at least this support level here, that target I have at $95. All right, but again, way off the highs, like so many other semis. The vast majority, not even close, 25 out of 30. Divergent high way back there in 2021, UMC, and I'm going to pull this trend line down here. Why am I doing that? Because, you can see it's close enough. We're right on, let's just say it's on the trend line right now. Again, this one's sucking wind. And more importantly, it had this trading range here. It just broke below. That's not good. But if it can hold the trend line, whatever. ENTG, divergent low, but again, coming off a big divergent high, just like this one. And you had plenty of divergence building there that just never panned out. Let me draw it for you. Divergence right here. You get a little rally. Trust me, a little bit. Counter trend bear market rallies are fun to trade. That was 25, 26, better, 27%, 30 right there off that divergent low. But then what happened? You get too excited. You got to remember where you're at. You're below the 200s. You lost the 200s right here. That rally took you back to the 200-day exponential moving average, and you got shot down hard. So you could have gamed it. Just learn when to get out when you're gaming a bear market rally. Put in a divergent low here again, rally back. Where'd you get rejected? Right at the intersecting 200-day exponential and simple. Couple rejections, and then the stock dropped 21%. Finally took them out here, and that was bullish. Then you wanted to buy pullbacks to the 200 until it got lost. It got clearly lost right there. Not just a little bit lost, clearly lost the 200s, and then they've been shorting the rallies back to the 200 exponential since. All right. SWKS, nice clean up trend line there. Broke down recently. That is a bearish chart. This stock, there's something wrong with it, and looks like it's probably headed lower in my opinion. ASX, ASE Industrial Holdings, divergent high, wedge, sell signal breakdown. You could have shorted right there on that break. It dropped 27%, almost 28. Next sell signal comes on a break of that trend line. It's also when it took out, when it had that sell signal, it cut the 200-day moving averages right there. Rejected, tried to regain them, couldn't hold it, rejected, and it's below them right now. So that puts this one in a bearish technical posture. MKSI, nice bullish falling wedge breakout, came in the form of a gap last week, rallied back, and it's rallied back to the 200 simple, and still well off its highs right here from back in early 2021. LSCC, lattice semi, bullish falling wedge breakout, but it's rallying into its hit resistance here at about 55.80, and if it can clear that, it still has the 200 days to contend with, and then this downtrend line just above it. So it's clearly zigzagging lower. It's another of many semis that are clearly in downtrends. Stocks that have clearly peaked back either in 2023 or in some cases all the way back to 2021. QRVO, another one clearly peaked back in 2021 in a downtrend. Not much more to say about that. Ugly looking chart. RMBS, Rambus, there's your uptrend line. It just slightly undercut it, but with divergent low. But it's rallied back, testing the 200-day moving averages, and my guess it'll get rejected, and then next sell signal will come when it breaks 38.75. ACLS, a little wedge pattern. So again, this is for those of you looking for setups. There's a lot with these divergent lows, but they're also in downtrends. They're below their 200-day moving averages, so be careful. And then if the big leaders die, these guys will probably continue lower. Wolf, WOLF, Wolf Speed, just a little downtrend line, a breakout with no divergence. It had a little RSI divergence, had a little counter trend rally, but this is nothing but a bear market rally. This is a common theme. The majority of these semis are either in confirmed bear markets like this one, or well off their highs right now, and maybe what's in the potential early makings of a bear market. All right, that's it. We've cycled back to NVIDIA. That means I've gone through all 30. Long video. I'm now almost to that hour mark. But again, guys, remember when you watch these, you can always increase the speed in the settings, 1.5, 1.75, whatever your thing is. And then you can slow it down if you want to hear on a certain sector, but or certain coverage of a certain security. I'll wrap the video up here. This has been Randy Finney with Right Side of the Chart. Have a great day.